Hi, everyone. Thank you for joining me again for another episode of the Optimize Wealth podcast. My name is Lance Norquest, investment advisor with Bellwether Wealth, and today we're focusing on the Volatility Index, or more commonly known as the VIX. Often called the market's fear gauge, the VIX index measures how much volatility investors expect in the S&P 500 index over the next 30 days based on options prices. When investors get nervous and buy more protection, the cost of that insurance rises and the VIX goes up. One very important note is the VIX doesn't predict direction, just how big the swings might be. So instead of looking at the VIX as a market crash predictor, think of it more of as a measure of uncertainty to come. So how do we interpret the VIX? Well, the VIX is measured as a numerical value. Generally speaking, a low VIX is somewhere between 12 and 18. This would indicate that markets are calm and investors are confident. A high VIX can be defined as somewhere 25 or greater, which can indicate markets are nervous and bigger volatile swings are to be expected. And then once the VIX is very high at, we'll say 40 or more, investors are panicking and sharp volatile movements are to be expected. So with all that said, how should investors respond to the VIX or volatility in general? Well, remember, the VIX tells you the volume of fear, not the direction of travel. It also is just an index and should not be viewed as a crystal ball. So first, think about your goals and time horizon. If you have a long time horizon, such as 5 or 10 plus years, one rough month is just noise and it shouldn't drive excessive portfolio shifts. Second, use the volatility as an opportunity to rebalance your portfolio by maybe taking some profits in high performing investments or asset classes and buying the dip on some lower performers. It may also provide opportunities for tax loss harvesting. So volatility is the toll we pay for long-term returns, but it's our job to avoid turning that volatility into permanent loss. So as an advisor, what are some of my top risk management strategies that you could start to deploy? Well, first and foremost, you do need to understand as an investor what your tolerance to volatility or risk is. If you as an investor cannot tolerate the big downward swings, then you can't really expect your investments to capture 100% of the big upward swings. Next, you need to have an understanding of what your goals and objectives are with these funds that you've invested. I mentioned earlier, if this is a long-term, 10 plus year time horizon, the short-term volatility is just noise, and it should be viewed as an opportunity rather than negative performance. And if you're investing for a short time horizon, or maybe your goal was to start using this money today, for example, funding retirement, your portfolio should be structured in a way that gives you the necessary growth to continue funding that goal without being overly weighted in an asset class or an investment that causes large volatile swings. So consider adding multiple asset classes to your portfolio to help balance things out through these volatile periods. And maybe one asset class is underperforming, but your diversification to other asset classes is helping prop things up or lessen the blow. At the end of the day, volatility isn't something to fear. It's something to understand and plan for. The VIX index reminds us that uncertainty is a normal part of investing, not a signal to abandon a well thought out strategy. With the right time horizon, proper diversification, and disciplined risk management, volatility can be navigated and even used to strengthen long-term outcomes. As always, the goal isn't to eliminate risk, but to manage it in a way that keeps you aligned with your goals. If you have questions or you would like to discuss how to manage volatility within your own portfolio, please reach out to us by calling our office at 402-476-8844 or by visiting our website at bellwetherwealth.com. That's all for today's episode. Thank you for watching. Again, my name is Lance Norquest with Bellwether Wealth, and we'll see you next time on the Optimize Wealth podcast.